So let's talk about misbehaving investors. When I went to the store, there was a panic buying. We've all seen the headlines about toilet paper being in scarcity. I'm not sure exactly why that is, but we have a lot of people that have been hoarding. And I want to talk about why we hoard. We hoard typically because of a stressful event that occurred in the past. I think back to my grandparents that went through the Great Depression, and it really affected them the rest of their life. They did some weird things, like they would go to the bathroom in the middle of the night, and if they wouldn't flush until morning, until after they both had gone, because they wanted to save on water. Some weird things like that I'm sure you're chuckling about, but people do some interesting things when they have a stressful event. We fear losing money. We often distrust others, and we have trouble enjoying money. When we feel like we are losing control, which really comes down to the bottom root of why we hoard, is we want to be in control. We feel this anxiety from decision making. We regret from throwing something away, like when we try to clean out our closets in January, we know we need to, but we're like, man, I will lose weight one of these days and these jeans will fit. And the truth is, no, they won't. So we have regret from throwing something away we may need, and then we regret not buying something we may need in the future. I come home and I'm like, this was out. And Amanda says, why didn't you buy it? We might need that. And we often link self-worth to our net worth, and that's another problem. And finally, we believe the key to happiness and the solution to all our problems is just to have more money, and that's not true. We're also seeing people have what's called the availability bias. The availability bias means that what we hear on the news is not reflective of what actually happens in the world. Now, we can convince ourselves that it does because our news organizations do such a good job, but the truth is they cover the worst case stories in the news. And we see this come into play with what we do to make a decision. We use a small, limited amount of information to make a decision based on information we saw on Facebook, but the available information was much broader, much larger. So we're seeing this take place. The other thing we're seeing is people are impatient. I love this quote. All of humanity's problems stem from man's inability to sit quietly in a room alone. We are so impatient, but when you plant a tree, you don't dig every day to check whether the roots are growing. If you do this, you're going to kill the tree and it will not bear fruit. Instead, you should water it occasionally and let the natural cycles take place to bear fruit in its season. The same thing happens with portfolios. If you're going to continue to dig up your portfolio and wonder, why is this in here? Let's change this. Let's change that. You're going to kill it, and it will not bear the fruit that it's intended to bear. We see this, and it's called action bias. And I've written a blog about this on our website, investedwithyou.com. We think that restraint is not adding value. We think that doing something is better than doing nothing. And we convince ourselves that we should be making changes to our portfolio and tinkering with them. I like the phrase, treat your portfolio like a bar of soap. The more you touch it, the smaller it will get. And I also like the recent one I read, treat your portfolio like your face. Don't touch it. So we're impatient, and we see this because the average holding periods for stocks by decade is completely been declining. I think the average holding period I read was we hold stocks about 3 months. This is ridiculous. It's so impatient, and it's not doing us any good. The reason why we're so impatient has to do with loss aversion. I've talked about this a lot. We feel the pain of losses 3 times more than we feel the pleasure of gains. The feeling of loss this quarter has weighed on us so much more than, let's say, let's go back to 2019, the feeling of gain that we had in 2019. Oh yeah, things are great. And then 2020 happens and, gut wrenching. This is why I encourage all of our intelligent investors to not keep looking at your portfolio. It's not because I'm afraid you're going to see a loss, because I can tell you this quarter you're going to see a loss. It's because the more frequently you look at your portfolio, the more likely you're going to see a loss. And going back to that action bias, you convince yourself that doing something is better. As you can see here, the more frequently you look, the more chances you're going to see a loss and want to react. Which goes back into our overconfidence bias, which says the rational part of our brain tells us that market timing doesn't work. But then the irrational part of our brain tells us we are the exception to that rule. And we say to ourselves, market timing doesn't work for most people, but they don't know what I know. And we fool ourselves, and it's a lie. And this is why the behavior gap is so important to understand, that every year, the typical investor, compared to just holding on to the investments, completely underperform in the long run. JP Morgan does this study, and over the last 20 years, going back to 1998, if you just held on to the S&P 500 or had a 60-40 portfolio or a 40-60 portfolio, these are the kind of returns you could have expected. But here's the misbehaving investor, significantly underperforming what they would have done if they had just buy and held. And you also need to understand that risk cannot be destroyed. It can only be transformed. So these are why you have different things and different factors in your portfolio. They don't always work all the time, but they do work over time.